Welcome to another edition of the Trading Bell. We're coming to you from the Nairobi Securities Exchange here in Westlands at the trading floor. And today we'll be talking about the manufacturing industry. I'll be having an interesting conversation with a man that has continued to shape headlines in the manufacturing world. And who is this man? Well, we'll be hosting today Heril Bangera, the Chief Executive Officer of Flame Tree Group, will be sharing with us some insights on what the manufacturing sector has been like. But first, let's take you through Heril's profile. Heril holds a bachelor's degree in mechanical engineering, a BMCE from Bangalore University, and pursued the Honours Management Program at Strathmore University. He is responsible for overall running and strategic planning for the group. His ability to guide Flame Tree Group Holdings through its formative years and assist in financing and expansion of the group's operation during its infancy has proved instrumental. Well, join me for that conversation with Mr. Bangera. Welcome to Trading Bell, Heril Bangera.
Thank you, thank you.
Please have a seat. Well, it's been a turbulent 2017 by all estimations. A number of companies last year issued profit warnings, and I know you were part of those companies. And how did 2017 impact on your business operations?
2017 was a hard year for everyone in Kenya. I mean, in any country, when you have one elections, it's hard. But it was a different year, it was a difficult year. We ended up having two elections. Our first half of the year was, we traded fairly well. But the second part, where there were certain uncertainties in the political scene, it did affect our business. Apart from that, there was already the ongoing slowdown because of the interest cap. We had the initial drought in the year for the first half again, for the first quarter.
Yeah.
Those all gave in a lot of impact, plus certain retailers within the field of FMCG
Yes.
Reduced their trading, which definitely affected us.
All right.
So it was a year where we had to, if we say, coast the turbulent waters.
All right. How do you see 2018? We are now into the third month of the year, and how are things panning out?
The first day of the third month, I would say. 2018 so far has been good. In comparison to 2017, obviously. But for us as Flame Tree Group, we're extremely optimistic that this year would be a better year than last.
All right. I've heard many analysts saying 2018 is a year to be cautiously optimistic. I like the words that you've used there. You are extremely optimistic. Yeah. And Heril, looking at Flame Tree as a company, you did list in the Nairobi Securities Exchange, and perhaps talk to us about the experience of being a listed company, and how has this sort of improved your internal efficiencies?
The initial part of listing did give us a boost as a business because it gave us the needed capital. But post-listing, we've carried on growing. But I would look at us as Flame Tree Group, if you look at us internally, the changes that listing has helped us is better corporate governance, better procedures and processes that has helped change the business internally. The corporate culture has improved, where we are now more focused on returns on investment, shareholder value, and these are things that happened or forcefully happened post-listing. So I think the listing has had a positive effect on us. Apart from that, we've been able to, if you look at not institutional investors, but financial institutions, yeah, they are more at ease lending to companies like us post-listing.
All right. Yeah. Given an opportunity to encourage other people to list, would you go that route?
Yeah, I always encourage people to list. Listing has its advantages and disadvantages. I think a company has to first understand what's its core values and where it wants to see itself in a couple of years. And if listing and growth does come within that number of things that the company does aspire to achieve, then listing is one of the various options.
All right. Let's shift gears a bit, Heril. The manufacturing sector is poised to generate significant revenues for the government and also sort of create jobs. And as Flame Tree, I know you handle a very expansive portfolio. Just walk us through how business has been in terms of driving growth in the different portfolios that Flame Tree currently operates under.
Yeah, manufacturing for any country, in my belief, is necessary to see that the country transits from a low income to a middle or high income country.
Yeah.
So the government is right in putting emphasis and focus on manufacturing. For us at Flame Tree, we believe there's a need for product as the economy does grow. Therefore, we need to manufacture certain products here. I'm a big flag bearer that manufacturing is possible in Africa. If it can be done anywhere else in the world, it can be done here. So for our business, within our manufacturing, our plastics business has been growing. We've seen the need for water tanks and the various plastic products that we do increase in the various countries that we manufacture in. If you look at our food business, we had a difficult first quarter because of the drought. The availability of produce was not there. But post that, we've done fairly well. Cosmetics has done fairly stable throughout the years, although this year we had a difficult year again because of the retailers. But if you look at the manufacturing on the whole, it's not because of the cause of manufacturing, it's because of the cause of the business environment that was there. So looking forward to 2018, if all things stay stable as is, we look at a positive 2018.
All right. Let's talk about the numbers a bit, Heril. Of course, you're in the cosmetics business, the plastic business. How much does each contribute towards your balance sheet at the end of the day?
On our numbers, we distinguish our verticals as manufacturing. So cosmetics and food does come within, and plastics come within manufacturing.
Correct.
And we have a second vertical, which is trading. Our manufacturing constitutes about 74% of our whole portfolio. And within that, we segregate, but we don't disclose those segregations.
All right. And let's take a forward look now, Heril. You did make a substantial acquisition into beauty products a few years ago. And how has this sort of performed? Has it been a profitable venture, or from where you sit, how would you assess it?
The way I look at the post-listing, we've done a number of acquisitions, both in beauty and in food.
Yeah.
And more recently, we did on playground equipment.
Oh, yes.
Our idea has been within acquisitions that the acquisition needs to fit well in the business. So we've been fairly lucky that way. But if I look at if you're looking at the numbers, have the businesses grown? Has there been the acquisition impacted extremely positive on the top line? I would say they've been stable. The way what we've done is post-acquisition, we've done a lot of investments in those acquisitions to see that they come to a level where we are comfortable with. So I feel it's a bit early to judge what's the returns or outcome of those acquisitions. In any acquisitions, initially there's got to be culture fits, the product has to fit well within the business scheme of things, and that has been done.
All right. And Heril, making an acquisition for any businessman is not something you wake up and make a decision. And you have been one of the CEOs who has been very strategic when it comes to taking that opportunity. Perhaps looking at acquisitions, how critical are they for businesses here in Kenya?
I'm a acquisition person. I feel a company needs to grow both internally and through acquisitions. If you look at the beauty acquisitions that you talked about, one of them was Suzy Beauty.
Sure.
It was in a business that we were not existent in. So the acquisition helped us get very quickly into that business. More recently, we did the playground equipment, which fit well. People wonder, is playground within the same as plastic? It's using the same equipment that we make the plastic water tanks. We make the playground equipment. Now, that fits well so that we can take it into the various countries that we operate in. So for me, I believe acquisitions help us achieve that knowledge much faster than just organic growth.
All right.
Although organic growth is also important, and we've been doing both.
And looking at the regional outlook for the sub-Sahara Africa, it is promising in some countries, while in some countries, in equal measure, it's not as promising. From where you sit, which markets will you be looking to perhaps tap into moving forward?
Interesting question. For us, as Kenya is still our key market. It's key because we started here, and our largest revenue still comes out of Kenya. We are optimistic in the countries we operate in. A lot of people look at Africa and discuss Africa as one country, one continent, and everything, all parameters are equal in each market. But like you rightly said, it's different in each places. So we look at our investments in each of these countries. Where are the opportunities? At the moment, as our target goals are, we want to move our FMCG business more into the countries that we operate in, scale that, strengthen that, and then look at new markets.
All right.
Yeah.
And finally, Heril, it has been also a challenging year. That was 2017. Looking into 2018, what are some of the key issues that you'd like to see major shifts in? Be it taxation issues, be it matters to do with the war on counterfeits? What is that one thing that keeps you awake at night?
I'd like to just see that business grows. That one question, I think there are many issues that actually a business like ours does affect. If you look at it, there are many unknowns for us. We never knew 6 months or 4 months ago that the political situation in Ethiopia would change.
Sure.
That's something that was an unknown. So things like that affect me. If the oil price moves up, that affects us. So those are fears that we do have. But for me, the way we look at business is not for today, not for next year, not for 2018. Let's plan for 5 years, for 10 years. That's what manufacturing is for. So on the long run, the markets that we are established in, we believe that we are very optimistic of those markets.
All right. Your parting shot on matters to do with industrialization?
I believe the government is doing the right measures in supporting manufacturing, and the more incentives or support there is for manufacturing, the more it will help the economy.
All right.
Yeah.
Many thanks.
Thank you very much.
We appreciate your coming to the Trading Bell, and we definitely will be looking out for Flimtree's performance in 2018. We wish you all the very best.
Thank you.
Well, on that note, that's where we wrap it up on the interview segment. We now want to transition over to the financial analysis. We've been speaking there to Heril Bangera, the Chief Executive Officer of Flimtree, sharing some interesting insights in the manufacturing business. And he is quite optimistic that things are looking up in 2018. But for now, time for the financial analysis. So what stands out for you, especially when it comes to the NSE 20 share index?
We've just seen some great movement in the market. I think the performance has been quite robust compared to other periods of trading.